Good evening, everyone, and thank you for joining the September 15th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. My name is Dr. Tisa Silver Kennedy, and I thank you for joining this evening. So, quick agenda before we get into questions from our community. First, I would like to tell you a little bit about the Maryland Center for Collegiate Financial Wellness, then specifically office hours, and then I'll go through answers that have been prepared based on questions that have been submitted by way of email, registration for office hours, and social media. This evening's questions center on loan cancellation, as the Biden relief plan, of course, is pretty popular among student loan borrowers these days. Then the return to repayment, which we'll begin to look at for next year. Also, some questions about consolidation, as well as public service loan forgiveness, specifically the limited PSLF waiver. And throughout the event, please do feel free to drop your questions in the Q&A if you're joining me on Zoom, or in the chat if you are joining via Facebook. So let's move on to a bit about the Maryland Center for Collegiate Financial Wellness. I refer to the center as MCFEW. MCFEW is a relatively new organization, started in 2021, and we are on a mission to help students and families build their financial life skills and empowering them to thrive. Our vision for all college and career students in the state of Maryland is that they're able to achieve these 6 pillars of collegiate financial wellness. That is being credit-worthy, ready, resilient, empowered, successful, and thriving. I will not read through the entire vision for you, but if you're interested in learning more about the center, please do visit us online at mccfw.org. Again, that's mccfw.org. All right, about office hours. Office Hours is a free semi-monthly virtual student loan clinic that provides borrowers with a trusted venue to help them navigate student loans and prepare for financial success beyond repayment. Office Hours is presented for informational purposes only. Nothing that's presented in this edition or any other edition of Office Hours should be construed as financial or legal advice. We simply provide you with information and direct you to resources that you can use to make the best decision while being mindful of your personal finances, as well as your, including your student loan portfolio. So, let's dig right into the first question for the evening. First question is, I kept paying my loans during the payment pause. Can I get the $10,000 anyway? And we've received this question from more than one member of the community. So let's talk about getting refunds. So the answer is that voluntary payments that were made on loans that were held by the Department of Education can be refunded. And that will require you to determine if your loans are indeed held by the Department of Education. So to do that, you want to log into studentaid.gov. And when you're in studentaid.gov, you'll be able to see the history of all of your federal student aid that includes loans and grants. And you'll also be able to see your loan servicer or servicers. So when you look at the list of servicers, you want to look at the names of those servicers. And if the loans are held by the Department of Education, you will see Department of Ed in front of the actual name of the servicer. So for example, Nelnet is one federal student loan servicer. If you have a Department of Education held loan that is serviced by Nelnet, when you look at the servicer's name, you will see Department of Ed / Nelnet. So that's how you verify that your loans are held by the Department of Education. If your loans were included in the payment pause that we've been in since March of 2020, then your loans are Department of Education held loans. And if you made payments on those loans, voluntary payments on those loans, you can contact your servicer to request a refund. I know some people have made the call already and have said the check's on the way. So it can work for you, but you would need to ask if you want to be refunded. The other thing that I did see on the Department of Education's website, specifically about the student loan debt relief plan, is that some people can receive automatic refunds, but after they apply for broad relief. So if you are like me, you want to make that request and not leave it up to the system. But there is a provision in place so that borrowers who do apply for the broad relief of either $10,000 or $20,000 there's a provision in there for them to receive automatic refunds if payments were made on those loans during the pause. As for how those refunds work, please keep in mind that this is a new development. The Biden-Harris relief plan, student loan relief plan, was announced on August the 24th. So information is still coming out bit by bit. So I'm checking their website every day, sometimes a few times a day, looking for updates on the application and what this process will look like. So there are a few things that are listed there that could be automatic, but if you would like to stay abreast of those developments, please do visit studentaid.gov/debt relief. And there's even an option for you to sign up for updates so you can be notified when more information has been released. All right, so there's some people that made payments during the pandemic. There are other people who went all the way and paid their loans off during the pandemic. Since March of 2020, most student loan borrowers, have not been required to make payments on their loans, and interest has not been accruing. And from the perspective of wanting to eliminate debt as soon as possible, this presented a great opportunity because payments were not due, interest is not accruing. So people could send in those payments and get ahead of more interest accruing and also begin to attack that principal balance. And for some people, it went so well that they paid off all of their student loans during the pandemic. For some people I've heard from, they were a bit disappointed to know that they paid off their loans and then a relief measure was announced, and they were disappointed because they thought that they would not have access to that relief. If you are one of those people who paid off a federal student loan held by the Department of Education or paid one down, then you can request from your servicer a refund of the payments that you've made. And once you've requested a refund, once it's processed, it would create a balance back on your federal student loan. And having that balance there would allow you to have something available for that cancellation of up to $10,000 or $20,000. So if you've paid off your loan, if you've paid down your loan, if that loan or those sets of loans are loans that were held by the Department of Education, then you can get a refund. You just want to reach out to your servicer, or if you're comfortable with waiting for an automatic refund on the back end, then you would have to make sure that you apply for the cancellation once the application becomes available. But like I said, if you're like me, you want to make sure that you're proactive about this. And if you paid off that debt, you definitely need to reach out to the servicer to make sure that the refund can get processed and that you'll have a balance there when it's time to apply for cancellation. The question has also emerged about people who refinanced. Refinancing means that you had your loans paid off, but they were paid off by a lender outside of the federal government. Usually with private loan refinancing, there's no going back. You've taken your federal student loans, you consolidated them into a new loan, but with an outside lender, and that's what makes it a refinancing. But there has been some language that has emerged that suggests that people who have refinanced their federal student loans with a private lender can contact the lender and request a refund, and then apply for the cancellation that's being offered by the Biden administration. Honestly, this is one of those things where I was pleased to see it, but I was also shocked to see it. And I need to see it work in practice before I'm 100% confident in this. I know what I read, but this is something that has multiple layers. You're not only dealing with the Department of Education, but you're also dealing with an outside private lender. And there's just a lot of variables. So in theory, it's good that some people who have refinanced their loans with a private lender would be able to access this cancellation benefit. But I really need to see this work before I can be super confident about telling people about it. But if you are in that boat, I encourage you, reach out to your lender and ask just to see what the process is. And if you are successful, please do come back and tell me so that I can share your experience with other borrowers who might be pondering the same decision. All right, so about that relief that everyone's talking about, the 10,000 or the 20,000, that leads to our next question, which is where can I find the application for the $10,000? And the answer is the application is not available yet. We've heard that the application should be available in early October, so we don't have too much longer to wait for that. But you definitely want to visit studentaid.gov, especially studentaid.gov/debt relief, so that you can keep yourself in the loop with updates about when that application will become available and how you can go ahead and apply for that benefit. So it's coming soon. Which leads to the next question. How can I make sure I get to $10,000? That number has been super popular in my inbox over the last couple of weeks. So how can you make sure that you get this $10,000 in cancellation that's been provided through the Biden-Harris student loan debt relief plan? So accessing that relief first, this particular borrower asked, how can I get the $10,000? But I want to step back a bit and think about the actual number, because some people are entitled to up to 10,000, other people are entitled to up to 20,000. So you want to make sure you want to verify if you are a person that falls into that $20,000 category. So what you can do is verify your status as a Pell Grant recipient. For that, you would log into studentaid.gov, and then you'll look at your aid history. There you can see any federal student loan you've ever taken out, as well as any grants, federal grants that you've received. So when you log on to studentaid.gov, when you get inside to look at your aid, usually you'll see circles. They're like wheels. The blue circle represents your loans. The green circle represents grants. So if you have a green circle there that says Pell Grant and it has the dollar amount, then you verify that you are a Pell Grant recipient. Also, with the Pell Grants, there has been no stipulation made as to how much you needed to receive in Pell Grants or how many times you needed to receive a Pell Grant. You just needed to receive a Pell Grant. So the dollar amount, the frequency do not matter. You just need to have received a Pell Grant at some point during your educational experience. And you can verify that by logging on to studentaid.gov, looking at that aid history. And if you see the Pell Grant history there, then that means that you could be eligible for up to $20,000. The relief is also subject to income caps, which we'll see on some of the forthcoming slides, but your adjusted gross income as an individual would need to be under $125,000 for either 2020 or 2021. If you're a married borrower or a borrower who files as head of household, then that income cap rises up to $250,000. Again, that's adjusted gross income. Has to be less than $250,000, and they're looking at the years 2020 and 2021. So after you verified your Pell status and you've made sure that you fall underneath those income caps, you want to make sure that when that application becomes available, you complete it. Like I mentioned before, it is set to become available in October, so that's next month. The application is set to remain available right now. It's set to remain available through the end of next year. So they're looking to close it after December 31st of 2023. And according to the Department of Education's website, borrowers should expect to receive the relief within 4 to 6 weeks of an application being approved. We've got lots of questions about how the cancellation is going to be applied, because many people have several student loans out there, and the methodology has been published on the Department of Education's website. It discusses the order in which the relief will be applied if you have multiple loans, looking at things like the interest rates, the balances. All of that is listed there, and it's lengthy, so I'm not going to attempt to describe it to you right now. Perhaps in the next edition of Office Hours, I'll go into that part of it in more detail. But for right now, if you want details on how that $10,000 or $20,000 will be reflected on your account, then you should visit studentaid.gov/debt relief. This is also a good time to say that this is not a $10,000 or a $20,000 check. It's not cash that anyone is actually going to receive. What will happen is that portion of the debt will be canceled. So the borrower's overall student loan balance will decline by the up to $10,000 or up to $20,000. But this is not a cash relief program in that nobody's going to be receiving checks. It's a debt reduction. And some people qualify for up to $10,000, others qualify for up to $20,000. I'm going to take a quick moment to check and see if I've got any questions on social media. And I see none so far. And I don't see any in the Q&A on Zoom. So I'm going to move on to the next question. All right, that question is, I borrowed loans from myself and from my son. We both received Pell Grants. Can I get $40,000? So this is a borrower who has taken out loans for their own educational experience, but has also taken out loans to pay for their child's educational experience. So let's look at this from the perspective of each of those borrowing situations. So for a person who borrowed student loans for themselves, the ceiling on the relief is $20,000. Of course, that's subject to the income limitations. For individuals, it's $125,000. For married or head of household, that income cap is $250,000. The deciding factor between the $10,000 or the $20,000 is whether the borrower received a Pell Grant during their education. And if they did receive a Pell Grant, then the number jumps from $10,000 up to $20,000. Now, for people who borrowed just Parent Plus loans, that means they took out loans to pay for their child's education. The ceiling on the relief that we've seen here is $10,000. This relief is still subject to the income caps of $125,000 for individuals and $250,000 for borrowers who are filing as married or head of household. The bonus $10,000 for Pell Grant recipients does not apply to Parent Plus loans. So this particular borrower was asking, my son received a Pell Grant, I received a Pell Grant, and I borrowed loans for my son and I borrowed loans for myself. Can I take that $20,000 and get it twice? My answer is, from everything that I've seen so far, that's not an option. So it does not appear that you would be able to double up on this relief because both the parent and the student are Pell Grant recipients as well as student loan borrowers. However, both the parent and the student can get some relief through this plan, provided that the loans were dispersed before June 30th of 2022. So the parent might not be able to double up, but if the student has loans, they would have access to relief, and the parent could also have access to relief. So two people would benefit, but the parent, I don't see any space right now for the parent to double up and get the entire $40,000 to themselves. I am going to take a pause for just a moment because I see I've got a question in the Q&A. Okay, so the Fresh Start the question is, will you cover the Fresh Start program in today's presentation? You know, I had not had that question in the queue, but this seems like a good moment to talk about the Fresh Start program. The Fresh Start initiative has been one thing that distinguishes this student debt relief, this extended period from the others. Every other period, we just heard there's going to be a continued payment pause, continued pause on the interest accruing, and once repayment goes back into effect, everyone will basically pick up where they left off prior to the CARES Act forbearance that went into effect in March of 2020. But when the last extension was announced, that not this last one that pushed it to December 31st, but the previous announcement that pushed the payment pause out to August 31st of 2022, it included another piece, and that was called the Fresh Start Initiative. The Fresh Start Initiative was designed to pull borrowers out of student loan default. The reason why it's such a big deal is because the consequences of student loan default are severe and far-reaching. Student loan default is the state of having not made a payment for at least 270 days. So we're talking about borrowers who have missed payments for at least 9 months. When a borrower finds themselves in default, the financial consequences can be severe. Their wages can be garnished. They can be sued for the entire balance. They can also be held responsible for the court costs, any other costs that a lender or their representatives might have spent trying to pursue the debt. They can have their academic transcripts withheld, which by itself, some people don't think that that's a big deal. But if you're applying for a job which requires you to have official transcripts and you aren't able to get a transcript from your school to verify that you graduated or completed coursework, then you might not be able to apply for and secure the job. Your credit will be damaged. And if you're applying for a loan for a car or for a home, the lending terms that you receive will not be as favorable. You might have higher interest rates. Lenders might want you to make a higher down payment. Basically, it just makes everything else that you finance have the potential to be more expensive. You'll pay more for a car over time, more for a home over time, and all of that can be traced back to defaulting on the student loans. Social Security benefits can be seized. I mean, the list goes on and on. So for people to experience this payment pause since March of 2020, and then once payments resume to get thrown back into default would mean that, yes, payments haven't been required for all of this time, but they're still in a bad space once repayment resumes. And one of the goals of the Fresh Start Initiative is to make sure that everyone has a smooth return to repayment. So the Fresh Start Initiative was designed to pull people out of default so that they don't have to experience those consequences, and hopefully they can get back on track to smooth repayment. Something that is going to give a lot of people a boost is the actual cancellation of $10,000 or $20,000 worth of their federal student loan debt, because many people owe less than $20,000 altogether. So having that debt canceled would also pull them out of default. I do have to say I need to get more information on the Fresh Start Initiative and the mechanics of how it would work, but I can say that that announcement really that made me feel a lot better about the return to repayment, because it is making certain that people who were in default will not be in default when repayment resumes at some point after December 31st of 2022. So I'm definitely going to write that down so that in the next edition of Office Hours, I can have details about the Fresh Start Initiative and a bit more about its implementation. But my hope is that for everyone who is in default right now, they will either they will be pulled out of it in one of two ways. One is by having their debt completely canceled, and the other would be by the Fresh Start Initiative and the Biden administration's pledge to help people return to repayment, but without being in that state of student loan default. Okay, I'm going to make one more check to see if I have any other questions. All right, I don't see any on Facebook, and the Q&A is empty in Zoom for the moment. So let's go ahead and move to next slide. All right, so a slightly unrelated question. This was, I want to complain about my loan servicer. What are my options? So let's take a look at the options. Some of the options include the Consumer Financial Protection Bureau, also known as the CFPB, and you can visit them online at consumerfinance.gov. The U.S. Department of Education also has an ombudsman. The process for reaching the ombudsman's office is laid out quite clearly on the Department of Education's website. It's not something that you go to just to say, I don't like how my servicer treated me on the phone, or something like that. Like it's designed for for a specific nature of complaints, and you can visit that website at studentaid.gov so that you can find out what types of complaints are accepted by the Ombudsman's office at the U.S. Department of Education. I also wanted to take a moment to share with you another resource at the state level, and that is the Maryland Student Loan Ombudsman. So the Maryland Student Loan Ombudsman takes complaints about servicer problems, but I want everyone to be mindful of the realm of what the student loan ombudsman can address. So that's why I included here, you'll see the student loan servicer problems that the state's ombudsman can assist you with. And those problems include: 1, failure by the servicer to communicate with the borrower; 2, errors in crediting principal and interest payments. 3, misapplied payments. 4, inaccurate interest rate calculations. 5, billing errors. 6, loan consolidations and or modifications errors. And lastly, inappropriate collection activity or tactics. So that is a pretty wide range of issues that borrowers might encounter with their servicer. And if you are experiencing those types of issues, I would encourage you to reach out to the Maryland Student Loan Ombudsman through the Department of Labor. I also wanted to share with you that Maryland has a student loan borrower's Bill of Rights. So you can view the Bill of Rights again by visiting the Maryland Student Loan Ombudsman's office online through the Department of Labor, and you can learn about the protections to which Maryland borrowers are entitled and the obligations of student loan servicers. So it's a very clear document. It's available for everyone to see. And if you feel that your servicer has not lived up to what's included on their side of responsibilities, please do reach out to the Maryland Student Loan Ombudsman's office by going online and filing a complaint. All right, now shifting gears a bit, we've got a question about public service loan forgiveness. I have applied for public service loan forgiveness several times and had a qualifying payment count of 96, according to FedLoan this summer. I sent a new PSLF application to MOHELA and received a letter that my application was denied because I do not have any eligible loans. All my loans have been direct since 2005, and I don't understand. Honestly, I don't understand that either, but I can say to this borrower, you are not alone. There's a lot that's been lost in translation for many borrowers. For those of you who are new to public service loan forgiveness, for years, the only servicer responsible for administering the public service loan forgiveness program was a company called FedLoan Servicing. FedLoan Servicing is exiting the student loan servicing business, so their portfolio of loans will be transferred over to another servicer called MOHELA, and that transfer began earlier this year. It seems as though during that transition to MOHELA, sometimes all of the information for one borrower, it just doesn't seem to be making it over altogether, or somehow it's not being accessed when communications are going out to borrowers. So there's some people like this particular borrower who is obviously in the pipeline for public service loan forgiveness, already had 96 out of the 120 payments that were required to gain public service loan forgiveness, but now has had their loans moved over to a new servicer and has been told flat out, you don't qualify for this program because you don't have the right kind of loans. But this borrower knows, and I have verified that the borrower has direct loans. So I mentioned before that this is, it doesn't seem to be unique. Usually the first letter that borrowers are receiving, this is based on experiences from people sharing them with me and also online. The first letter usually, it leads the borrower to believe they've been rejected. In this example, the borrower was told they didn't have the right kind of loans. In other examples, the borrower has been told that their employment has not been verified. And without employment, you can't get public service loan forgiveness because it's a program that forgives debt for people who have worked in public service. There's some people who have consolidated their loans recently, and perhaps they're told that, you know, you only have 2 qualifying payments. That's an example that I saw, and that was from a person who'd been in repayment for more than 15 years. Their first letter said that they only had 2 qualifying payments. However, a few weeks later, a follow-up letter came, and that follow-up letter had 91 payments listed. And what happened was the first letter that the borrower received was based on the most recent loan, which was the consolidation loan. And since the borrower had recently consolidated, the servicer looked at that loan and said, okay, you have 2 qualifying payments out of the 120 that you need for public service loan forgiveness. Then after that first letter, the servicer went back, reviewed the older loans that were included in that most recently consolidated loan. That made the count jump up to 91. After that review, the servicer went back again, reviewed all the employment, In the corresponding loan history, this servicer's number of payments went from 91 to 156. And since 156 is greater than 120, it took that third letter, that third payment count for this borrower to have officially achieved the landmark of 120 and having their debt forgiven through public service loan forgiveness. I say all of that to let you know that even if the first letter sounds like a rejection or just says flat out, you don't qualify, that's not the end of it for most people. It's not the end because it's based on incomplete information. So after you receive that letter, if you know that you have the qualifying employment, if you know that you have the direct loans, give it a bit of time or reach out to the servicer to ask for more information. You can also log on to their website and take a look at the payment history to see if there are months that are missing in employment verification, but do not count yourself out. And I know that that sounds so, I know that sounds backwards because you're getting a letter from the servicer that's telling you that you don't qualify, but you know your work experience, you know the types of loans you have, and apparently there are some communications that are going out automatically and regularly that aren't necessarily accurate. So hang in there. Another count that's typically more accurate usually follows within a few weeks. The unfortunate side of some of these rejections, well, there are multiple unfortunate sides of this, but another unfortunate side of this is that sometimes the rejection letter causes a person to think, well, if I can't get my debt forgiven through public service loan forgiveness, then I can search, private lenders and get a better interest rate so that maybe I can pay this debt down faster. And so people have received rejection letters and decided to refinance their debt because they were under the impression that they did not qualify for this type of loan forgiveness. If you are interested in public service loan forgiveness, please do not refinance your loans. If you refinance your federal student loans, you will lose eligibility for federal student loan benefits. Public service loan forgiveness will no longer be an option because it's only available on federal student loans, specifically direct loans. If you refinance, you're now going to be with a private lender and public service loan forgiveness will not be available. So if you have a letter that mentions rejection, you definitely want to explore why, follow up with the servicer if you feel so inclined, or just give it a bit of time to see if an updated count does come. I want to take a pause because I have another question in the Q&A. Okay. So the question is, as a follow-up question, is there a cutoff date for borrowers on default to qualify for the Fresh Start initiative? For example, the initiative applies to borrowers that went on default after or before a certain date, and would anyone in default automatically qualify for Fresh Start, or do they need to reach out to the Department of Education? I have to look for that. I'm writing that down right now. Cutoff date for Fresh Start. I gotta tell you, I don't know that information right now. I will look for that and I will reach out to you and I will send you the answer. For this to truly be a fresh start, my personal opinion is that it would be, there would be something that's automatic. I would hope that it doesn't require the borrower to do something, because of the fact that if a person is already in default, meaning going at least 9 months without a payment, then it would, it could be that there's not accurate contact information for them. It could be that for some reason they're not accessing information that's being sent to them by the Department of Education, or it could be that maybe they're just avoiding it because they're in default and they don't want to deal with it. So having them apply for something or have to do something within a certain time frame, I would think would decrease the chance that somebody in that situation is actually going to be able to take advantage of the Fresh Start. When the Fresh Start was first announced, I believe I saw information about people being pulled out of default and not being forced to apply for anything to be able to get that benefit. So I will revisit the announcement. I will see what information is out there that's more up to date. My hope is that it will be something this automatic so that we don't have to rely on borrowers who are already in a tough situation to do more work to get out of it. I also hope that many of them, millions, will be out of the default anyway by accessing that cancellation. And of course, there's an application there, but I hope and really, really hope that they are able to get that and access that relief. Okay, so let's head back to the slides. And I just want to say one more time, if you want to be considered for public service loan forgiveness, please do not refinance, because if you refinance your loans, you are heading into the realm of private lending, leaving the federal government and losing access to benefits that are out there for federal student loan borrowers. So let's move on to the next question, which is right on time. That's what can I do to get ready for repayment? The payment pause has been in effect so long. I know that we're all used to it. It started in March of 2020. Here we are in September of 2022, and it's still going on. But the Biden administration's announcement on August 24th included that the payment pause would end December 31st of this year. So one thing that I strongly recommend is knowing who your loan servicers are. I know that for some people, this sounds like, well, duh, how would I not know who my servicers are? But this has been a year of servicer transitions. There are some servicers that are exiting the business and their portfolios are being transferred to other loan servicers. So there are some shifts going on, which might make it difficult for a person to know exactly who their loans are with. So to know your loan servicers, please log into studentaid.gov. You can take a look at your dashboard and see your loan servicers. And while you're there, make sure that you update your contact information, your phone number, your permanent address, your email address with the Department of Education so that they have the most current contact information on file. And if you do know who your loan servicers are, I would suggest that you go to their websites and make sure that all of your contact information has been updated there as well. If there are benefits, we want to make sure that they can contact you and get you the relevant information. And also when the bills are due, you want to make sure that you have proper information about who to send your payments to. Another thing I'd like to recommend, especially because of this transition that we're seeing in the loan servicing space, is that you download your payment history. Ideally, you want to do this before your loans are transferred to another servicer, because after the transfer, you might go back to the old servicer and find that your records are no longer available. Make sure that you download your payment history, because sometimes that payment history can get lost or be inaccessible, and you might need to provide your own proof of payment to access some benefits. So go in there, download the payment history so you can make sure that you've got a record of all of the past payments that you've made. Lastly, if you're wondering what repayment is going to look like, you can log on to studentaid.gov and use the loan simulator to help you estimate monthly payments. The loan simulator, once you've logged in to studentaid.gov, will allow you to use your own personal loan history to plug into their system so that you can view what repayment looks like under the balance-driven plans as well as the income-driven plans. So again, that's studentaid.gov loan simulator. You can look there and estimate your monthly payments. All right, next question. Looks like this one is shifting gears back to loan forgiveness. So the question is, how many applications do I need to file if I'm applying for PSLF and teacher loan forgiveness? So let's talk a bit about both of those programs. Both of these programs are ongoing. I do want to just say very quickly that with public service loan forgiveness, even though the program is ongoing, the limited PSLF waiver, which is this temporary overhaul, which is expanded eligibility, is set to expire on October 31st of 2022. So if you'd like to get the maximum benefit for your prior repayment history, you want to make sure that you submit your documentation before the waiver expires on October 31st of 2022. Okay, so back to the programs. So public service loan forgiveness forgives the remaining balance for borrowers who have worked for qualifying employers while making payments for at least 120 months. And under the waiver, they're just looking at repayment status history, not your actual payments. So many more people are qualifying for PSLF and getting more credit for past periods of repayment. But with PSLF at its core is the type of organization that you work for. PSLF isn't about your role within an organization. It's about the type of organization that you work for. So qualifying employers include government agencies from the federal level all the way down to the local level, as well as certain types of nonprofit organizations. So if you worked for those types of organizations, then your employer's status as either a government agency or a certain type of nonprofit organization is your gateway to PSLF because you have the qualifying employment. With PSLF, there's an application that you need to complete that verifies your employment. Where this can get kind of confusing for teachers is when a teacher switches schools. So in this example here, we have James. James worked for 2 Baltimore City public schools since 2008. So for the purposes of public service loan forgiveness, James has about 14 years of employment history, and that employment needs to be verified at the district level because even though he worked for 2 different schools, they're within the Baltimore City Public School District. So the district is the employer. The district would verify his employment with one application. Now, for people who are on track for PSLF, the recommendation is that you submit a PSLF application once every 12 months so that your employment can be tracked as you're working. If this is James's first time applying for PSLF, then he would submit this application and they need to verify that he's worked there for the past 14 years. But ideally, you'll do this as you work. But since the employer remains Baltimore City Public Schools, James would only need one application because that's his one employer, even though he worked for 2 schools under the umbrella of that employer. And of course, James would want to make sure he gets that paperwork in by October 31st of 2022. Now, teacher loan forgiveness is a different type of loan forgiveness program. Teacher loan forgiveness requires 5 years of service, but a person has to work in a low-income school or for certain types of educational service agencies. So it's not about the realm of teaching, it's about the school. Well, it includes teaching as well, but it's about the school or the agency that the person works for and whether that school or agency meets the criteria for the teacher loan forgiveness program. So if we were to look at James again, he's worked for 2 Baltimore City public schools since 2008. For the purposes of teacher loan forgiveness, James would need to provide documentation for each school because the loan servicer that's responsible for this program would need to verify that each school is included on the list that the Department of Education uses to identify Title I schools and those eligible educational service agencies. So James would need 2 applications, one for each school, and then submit those applications to the servicer to evaluate for teacher loan forgiveness. So both PSLF and TLF can forgive loans, but they do it in different ways and the application process is different. Another thing that's different about these programs is that with teacher loan forgiveness, the maximum that a borrower can have forgiven is $17,500. And that's after at least 5 years of service, and it depends upon the teacher's qualifications as well as what subjects and grades the teacher teaches. With public service loan forgiveness, the ceiling is a lot higher. With public service loan forgiveness, the borrower can have the remainder of their debt forgiven after the 10 years of working for a qualifying employer. The work doesn't have to be consecutive, but it works faster if the work is consecutive. So with PSLF, there is no dollar cap. It's just the remaining balance after that 10 years of working and making payments. In theory, a person can pursue both teacher loan forgiveness and public service loan forgiveness. But under the original rules of public service loan forgiveness, the years that a teacher used to qualify for teacher loan forgiveness could not be used to qualify for public service loan forgiveness. So teacher loan forgiveness requires a 5 years of service. A person would have to get the 5 years with teacher loan forgiveness and then work another 10 years while making payments to get the remainder of their balance forgiven by way of public service loan forgiveness. So altogether, that's a minimum of 15 years. Some people have just said, you know what, I'll go with teacher loan forgiveness because it only takes 5 if it works. And, you know, maybe I just won't get public service loan forgiveness. Others have said, you know what, I'm going to go for public service loan forgiveness. It takes longer, but that will get everything out of there if I'm approved. Through the limited PSLF waiver, now the years of service that were used towards teacher loan forgiveness can be counted toward public service loan forgiveness. So there's overlap that's allowed just because of the limited PSLF waiver. But to take advantage of that benefit, the person would need to apply before October 31st of 2022. Specifically, they need to submit their PSLF application before October 31st of 2022. All right, I'm going to pause for a moment because I see we have a question in the chat. The question is, what if you worked for a community college? Excellent question. So a community college is a public institution, and public institutions fall under the realm of government employers. So if you work directly for a community college, your employment is qualifying. One thing about the employment that we need to remember is that public service loan forgiveness requires the borrower to have full-time work experience. Full-time for the purposes of public service loan forgiveness is the greater of your employer's definition of full-time, or a minimum of 30 hours on average worked per week. So if you worked for the community college as a direct employee with an average of more than 30 hours worked per week, or that full-time status, then your employment qualifies for public service loan forgiveness. To figure out how close you are to the 120 payment mark, the Department of Education and their servicer would look at your employment history after you've completed that PSLF application, and then they will search that history to match it up with your repayment history to see if you had loans that were in a repayment status. And for all the months where you had those two requirements, those months would count toward the 120 that you need for public service loan forgiveness. Those two requirements are applicable through the PSLF waiver. Once the original rules of PSLF go back into effect November 1st, then there are more requirements that have to be met. And I have to say, under those original rules of the program, 98% of people who applied for the program got rejected. So you really want to make sure that if you're interested in public service loan forgiveness, making the most of it, you submit your application before October 31st of 2022. But community college employees, I encourage you, please apply, because you work for the government, and government is a qualifying employer for public service loan forgiveness. Okay, next question from the Q&A is, as a follow-up to the question about how many applications a borrower needs to file to apply for PSLF, can you elaborate on the process for a borrower that has multiple servicers and several loans? Okay, yes, I can. So if a borrower has multiple loans, then for the purposes of getting the most out of PSLF during this limited waiver, the person might want to consider consolidating those loans. If a person has several loans that are with several servicers, that means they have more than one point of contact, more than one payment to make each month. It could also mean that their loans are running on different repayment clocks. Maybe some loans have been in repayment for 5 years, maybe others have been in repayment for 7 years. If you have loans that are operating on those different repayment clocks, then technically you would have to apply for PSLF once each of those batches reaches the 120 payment mark. So in that example, the batch of loans that have been in repayment for 5 years, you would need another 5 years of repayment history and work history to reach the 120. But for the loans that have been in repayment for 7 years, you would only need 3 more years of that work and repayment history to get to 120. Through the limited waiver, you can take those loans, the ones that have been out there for 5 years, the ones that have been out there from 7, you can consolidate them and bring them onto the same repayment clock. And under the limited waiver, Credit is being given to the entire consolidation loan based on the history of the oldest loan in the portfolio. So in that example that I gave, we had some that were in repayment for 5 years, some that were in repayment for 7 years. Provided that the borrower had qualifying employment the entire time, once those loans are put together, they're all brought up to the 7 year mark on that repayment clock. The benefit is now you only have one batch of loans that needs to get to 120, and you've taken those loans that before needed 5 years of work and repayment history, and you've reduced that time down to 3 years. So if you have multiple servicers and several loans, I'd strongly encourage you to take a look at studentaid.gov, look at the loan types, and then decide whether you want to consolidate to make the most of PSLF. I actually have some slides in here about consolidation coming up a bit later, so I want to scoot to those because sometimes with consolidation, it's hard to hear it and picture how it works. Sometimes an actual picture works better. So I didn't even realize this is the next question, but should I consolidate first and then submit the PSLF application? So let's walk through that. In the beginning of the waiver, it was recommended that people consolidate first and then submit the PSLF application, but now we are getting closer and closer to that October 31st deadline. So the advice has been just focus on getting all of your applications in by October 31st. Ideally, the consolidation would take place first, but I would want you to get your paperwork in all on time, as opposed to waiting to make sure that the consolidation loan has been dispersed and then submitting the PSLF application, because I don't want anyone to miss out on the benefits of the waiver. So let's take a look. Here's an example of what the consolidation looks like. And this would be something to consider for people who have multiple servicers or multiple loans. So with consolidation, what you're doing is you are originating a new loan. And with that new loan, you are paying off the existing individual loans. So with consolidation at the federal level, you can actually consolidate just one loan. And sometimes people need to do that because they have the types of loans that are currently ineligible for public service loan forgiveness. So with consolidation, you're taking at least one existing federal student loan, paying it off and originating a new loan for the same amount. Some people consolidate because it makes record keeping easier. You go from having 2 or 3 servicers and 2 or 3 payments to one servicer, one payment each month. The other reason that people choose to consolidate is to gain eligibility for public service loan forgiveness, because those older types of loans, such as FFELP loans and Perkins loans, aren't eligible for PSLF. But a borrower can consolidate those loans and bring them into the direct loan program, which then makes them eligible for PSLF. So in this example, you have a borrower that has 2 loans. One is for $30,000, the other is for $40,000. If they consolidate these loans through the federal government, these 2 loans will be paid off and one new loan will be originated for $70,000. Now, what does that look like with PSLF? Well, if you are a borrower that has FFELP loans, the only way to get those loans considered for public service loan forgiveness is to consolidate them. So in this example, I have a borrower who has 1 FFELP loan and 1 direct loan. The direct loan is already eligible for PSLF because it's direct. The FFELP loan is not eligible for PSLF. However, a borrower can consolidate those 2 loans together, and by way of consolidation, that FFELP loan becomes eligible for public service loan forgiveness. So here we have a direct loan with 50 months of repayment history, and we have a FFELP loan with 110 months of repayment history. Under the old rules of PSLF, only the direct loan could be eligible, and it would take another 70 months for the person to be able to have their balance forgiven. The FFELP loan would not be considered at all because it's not direct. But when it's consolidated, those 2 loans come together. The direct consolidation loan would be given credit for the number of qualifying payments that are on the FFELP loan, because that FFELP loan is the older loan in the portfolio. So if you have FFELP loans and direct loans and you've been working for a qualifying employer for years, you might want to truly consider consolidating those loans so that your direct consolidation loan can receive credit for the payments that you made on the FFELP loan. but also so that you can get all of your loans with one servicer, one payment, and on the same repayment clock. I have to stress the situation that you're looking at here on this image of the loan with 50 months being brought up to speed to 110 months in. This part will not happen after the original rules of PSLF go back into effect. Under the original rules of PSLF, a person who had a FFELP loan like this, even if the FFELP loan had 110 months of repayment history, if a person consolidates that FFELP loan, they're going to start all over from payment number 1, and they would have to work and make payments for another 10 years to get to the 120 payments that are required to earn forgiveness through PSLF. So that's one of the reasons why I keep telling people about this waiver. Like, seriously consider this waiver, especially if you've been working for a qualifying employer for many years and you have those older types of loans that are not eligible for PSLF under the original rules. The waiver expires on October 31st. If you have these older types of loans, you can consolidate them into the direct loan program, and your past payment history can be counted toward the 120 payments that are needed for PSLF. The example that I gave earlier, where the borrower had a payment count of 2 that went to 91, that went to 156, that was a person who had a FFELP loan. And prior to the limited waiver, the person did not want to consolidate because they didn't want to start over at payment 0 and have to work and make payments for another 10 years. Because that person consolidated during the waiver, all of their past repayment history was counted, as long as we're looking at the months where the borrower had employment for a qualifying organization. So please consider taking advantage of the consolidation option through the waiver so that you can gain credit for some of those older loans that would not have counted toward PSLF under the original rules. I know that is a lot. Consolidation can get very complicated, and consolidating through the waiver also has additional layers. But the benefit, again, is that you can get those older loans that didn't qualify before on track to be forgiven faster. And you can also place all of your loans with the same servicer and on the same repayment clock. One thing I wanted to say before I wrap up the discussion about consolidation is for people who have the lengthy repayment histories and those older loans, it's possible for them that they consolidate and their count ends up like the person who went from 2 to 91 to 156 because they've got so much repayment history and so much employment history that they're already beyond the 120. But for other people that have less repayment history, you might find yourself in a situation where you apply through the waiver and the servicer comes back and says you have 75 payments. Well, if you have 75, that means you need to make 45 more payments to get to the 120. That means that after the waiver expires, you need to make sure that you're enrolled in one of the payment plans that qualifies for PSLF. And here's a list of those plans: the 10-year standard plan, income-based repayment, income contingent repayment, pay-as-you-earn, revised pay-as-you-earn. And then this doesn't happen often, but sometimes there are other plans for which the monthly payment is greater than the payment required of the 10-year standard repayment plan. Generally speaking, your income-driven plans are the ones that are most likely to yield a balance for forgiveness. So if you choose one of the income-driven plans, that should put you on the right track toward making sure that you're still getting credit for future payments toward the 120 that are needed for PSLF. For those of you that have those older loans and that long repayment history, I hope for you that your account comes back at more than 120 and you don't have to worry about enrolling in another repayment plan. But for people who know that you haven't had loans in repayment for 10 years or that you haven't worked in public service for 10 years, you want to make sure that you're on track for your future payments to count toward PSLF. And that means enrolling in a qualifying repayment plan after payments resume after December 31st of this year. All right, the last question for the night is the waiver going to be extended? How can I get PSLF if I apply after October 31st of 2022? So as of right now, the waiver is set to expire October 31st of 2022. I hope that it gets extended so that every borrower who has worked in public service can have the opportunity to have a more seamless application process. I'm lifting my voice, asking that waiver be extended beyond October 31st of 2022. So PSLF will remain after October 31st, but the old rules are scheduled to go back into effect. If you look at the far right column, you'll see the rules of the limited waiver. There are two. The first is that you have to have 120 periods of repayment, and those periods need to be while you were working for a qualifying employer. Any months where you have those two requirements can be counted toward the 120 that are necessary for PSLF. If you look at the far left column, you'll see the original requirements of PSLF. And after I read this list, you'll see why it's so hard for people to get through with these rules in place. The first rule is the borrower has to make 120 monthly payments. Those payments have to be made on time and in full. The second requirement is that those payments have to be made on direct loans only. The third requirement is the borrower had to be enrolled in a qualifying repayment plan for all of those 120 months. The fourth requirement is that the borrower had to work for a qualifying employer. The fifth and final requirement is that the borrower still has to be working for a qualifying employer at the time that they apply for and receive public service loan forgiveness. So when all of those requirements work together, then a person can have the remaining balance of their debt forgiven tax-free. With those rules in place, 98% of people who applied for this program had their applications rejected. With the rules of the limited waiver, we have seen more than 10 times as many borrowers have their applications approved in the past 9 or 10 months versus the number of borrowers that were approved in the program's first 4 years. So the waiver is making a difference. If you have employment history with a qualifying employer, if you have loans that were in repayment, I encourage you, please submit your PSLF application by October 31st of 2022 so that your application can be evaluated using these less strict rules that you see in the right column, because effective November 1st, unless the waiver is extended, those older, more strict rules are going to go back into effect. All right, before I close it out, I just wanted to thank you again for joining me for tonight's edition of Office Hours. If you have heard anything that you think might be of use to people in your life, I encourage you, Maryland, tell a public servant. MD TAPS is our grassroots campaign to spread the word about public service loan forgiveness, especially the limited PSLF waiver, as it is a time-sensitive opportunity that can bring public servants closer to finally realizing cancellation of their federal student loans after their work in public service. You can visit our MD TAPS resource page for more information on public service loan forgiveness, applying through the limited waiver, and sharing the word with the public servants in your life. That's at mccfw.org/MD TAPS.